So again, very briefly, why do we need the cost? Because the cost turned out to be the most essential part of the company and in your life, if you want to put it that way. The only way the company can generate profit, or you in a personal life to generate savings, is to make sure you're getting more than what the total costs are. I remember a long time ago, we're laughing and we're talking about this. I'm not scared of the high cost. I'm scared of the low income. So that's why the cost of goods sold is the first essential cost that I want you to find out. Second one is the operating expenses, obviously. But let's focus now on the cost of goods sold. For the cost of how can we find the costs of goods sold? Now that depends on the company. And since we have two types of business or three types of businesses, service, merchandising, and manufacturing, on different type of business, different way we're going to use to find the cost of our services or cost for our merchandising inventory or cost of our production that we're producing as a finished goods. So on the merchandising company, it's easy to find the cost of goods sold. Why? Because whatever we purchase, how much we pay for the purchase, that's how much will be our cost of goods sold. Once we purchase it, become cost for the company. Once we sell it, become cost of goods sold. And the only thing that we have to make sure is that we're selling it above the cost. That's for the merchandising company. Now, for the manufacturing company, we have to do the process of producing the product and then selling the product. Once we produce, during the production, we're going to find the cost, how much cost us to manufacture that product. And once we sell it, we're going to get the cost of goods sold. Again, we have to make sure that we're selling above the cost. That's why this is the essential part. Now, in manufacturing company, how are we going to find the cost of goods that we're manufacturing? By adding the direct material, direct labor, manufacturing overhead on one place. And once the product is produced and we say, okay, this product is ready to be sold, ready meet all the specification of the customers and ready to go, then we can say, okay, we have a product. We stop accumulating the cost. Whatever we have accumulated up to that point become a cost of goods, a cost of goods manufactured. Once we sell it, become cost of goods sold. Now, how are we going to find it? Well, direct material comes directly from the raw material. Raw material, we're purchasing the raw material, then we're using the raw material as a direct material, and that becomes first part of the product cost. That's easy. Direct labor. Direct labor comes from the payroll account and goes directly to the work in process account to meet with the direct material. The last thing that left is the indirect or manufacturing overhead cost, which manufacturing overhead cost represents all the indirect cost plus the additional costs which we needed in our production but are not directly traced to the product. So what will be that? That will be indirect material, that will be indirect labor, and any other indirect cost like a security, utilities, insurance, and anything like that. So once we have those costs, and once we say, okay, those costs are ready, then that means that we have a product. At that point, we stop accumulating the cost. We're going to find out how much is the total cost. In terms of direct material, direct labor, manufacturing overhead. And we're going to say, okay, we have our product ready to sell. Now we saw last time that direct material, direct labor, that's so easily to get that cost. The problem was with manufacturing overhead. Why the manufacturing overhead was the problem? Because the cost comes on different time, and we don't know the entire cost, the entire manufacturing overhead cost until the end of the period. So for that reason, we're using one trick. During the period, we're estimating, before the period starts, we're estimating the total manufacturing overhead cost for the upcoming period. Then we're choosing the driver who's going to drive that manufacturing overhead cost, or something that we can use as a driver. That driver we're going to use to allocate that manufacturing overhead cost to our products. And we're going to make sure that this allocation appears on every of our products, not only some of them, but on all of them. And once we have that estimation for the allocation base, we can come up with the predetermined manufacturing overhead rate. Now that predetermined manufacturing overhead rate is going to save our problem for applying the manufacturing overhead cost once the period starts. And we're not going to change that predetermined manufacturing overhead cost until the end of the period. And that's how we apply manufacturing overhead, and that's how we get the cost of our product. Now, that's the simplest way. Now we can make transition from the last chapter to the new chapter. That will be the easiest way to come up with the cost of the manufacturing overhead. Simply getting the total cost, divided by allocation base, and come up with the cost per unit. That method is very widely used in the practice. You're using it in everyday life. For example, let's pretend that two students renting together apartment. The apartment cost is $2,000. Number of students is 2. But using predetermined manufacturing overhead idea of calculation the cost, how much every student is supposed to pay per month?
1,000.
1,000. How did you get it? You get the total cost. You divide it by the number of users, which will be our allocation base, because if we don't have a student, there will be we don't have to pay rent. But since the students are the one that drive the cost, we're going to use the number of students for allocation base. And we're going to find out that every student's supposed to pay $1,000. Now, we can give you another example. Let's say 5 students going to the restaurant. The total bill is $250. How much every student has to contribute to the bill?
$50.
$50. How did you calculate it? You're getting the total cost, which is $250. You divide it by the number of users, or number allocation base, which allocation base this case will be, again, number of students. And you split the cost. Now the question is this fair? Is it easy to calculate it? Yes, definitely it's easy. You're getting the total bill divided by the number of the students, or the number of people participating in the dinner or lunch, whatever it is. And you're getting the total, how much each of them has to pay. The question is again, is this fair? What you're gonna say? Do you think that's fair? Well, that will be a tricky question because depends. If they consume exactly the same thing, yes, that will be fair. But if one of them drinking, let's say one of them drinking other things or using some or ordering some expensive food, which the other don't eat or don't like, now is it fair to split the cost evenly? What if one of them is on the diet and one of them is vegetarian? Then each of them is gonna eat different food. Is it fair now everybody to split the bill by the number of students? Well, in this case, when you go to the restaurant, that's easy because that time when the waiter comes and asks you, do you want one bill to put one bill for everybody or you want to split the bill? In this case, you can simply say split the bill and each of you paying whatever they actually use. So you can see now one way to pay the bill, because at the end of the day, the bill has to be paid. One way to pay the bill is if you're using the allocation base, and then everybody pay exactly the same amount. The second option will be to check how much each of them consume. Now, based on the actual usage, and then paying exactly for the amount or for the food that they actually eat. Which one is preferable? Which one do you prefer better? The simplest way, which we're gonna call it traditional way for allocating manufacturing overhead or allocating the total cost, or the allocation of the total cost based on the actual usage. Which one do you think is more accurate and more realistic?
Using with the actual usage.
With the actual usage will be more realistic, yes. So now, that's what we come in here to this chapter, the chapter 7. That's what we're going to talk about today. We're going to talk about for the manufacturing overhead cost allocation, and that's all. So for the manufacturing cost allocation, again, we're going to use, for simplicity, we're going to use the traditional method. With traditional method is come up with the predetermined manufacturing overhead, which we estimated before the beginning of the period when we get estimating the total cost, estimating the total usage, and come up with the estimated rate, predetermined manufacturing overhead rate. And then when we actually somebody using it, we apply it. The second method that we have available, or we can make available, is we to allocate the manufacturing overhead based on the actual usage of that cost, which make it more fair. Again, let's get back to the idea with the students and the rent. Let's imagine this. We have 2 students. No, let's make it 3 students in this case. 3 students, which renting the same place and paying $1,800. So for the upcoming periods, if we have to calculate how much they have to pay from now on, that will be very easy. Divided 1,800 will be the cost. That's going to repeat every period. And we have 3 people divided by 3 is going to be 600. Have to pay each of them every month. And that seems to be easy, fair, relatively fair. Let's say relatively fair, because 3 of them living in the same place. Now, if we add a little bit more information, then it's going to become interesting. What will be the information? Imagine this. First of them is full-time students. he's taking 5 courses this semester. So for the next 3 or 4 months, he's going to be on full-time on the five courses. So most of the courses he chose them to be online, or the teacher broke his leg. So he has to take the course online. No, actually, the teacher didn't break his leg. Somebody else has broken his leg for him, but that's a different story. So anyway, right, let's make it realistic, right? So now the student's going to take the courses online. Now, most of the time he's going to spend in the apartment. Second student, he's also full-time student, but he has a girlfriend. And most of the time he spent in his girlfriend apartment. Let's make it interesting. His girlfriend is she's Canadian, and he's international student. So basically, she even considered the fact that he can even drop the school, because if he married her, he can get the PR right away. Right? Let's make it more interesting. Okay, so he's spending most of his time with his girlfriend, and so he's staying with his girlfriend's place on Friday, Saturday, Monday. Friday, Saturday, Sunday, Monday, and Tuesday. So he's coming back to apartment only for Wednesday, Thursday to pick up some stuff, change some clothes, and going back to his girlfriend place. The third student, he's taking the semester off, and he's working 2 jobs. So he can catch up with the tuition fee. So he's just coming for the apartment to sleep, and he's going back to work. Now, is it fair now every each of them to pay $600? What do you think?
I think if we just focus only on the usage of the apartment, it won't be fair, but
Okay, so how are we going to get the usage of the apartment? That will be the key here. Yes, obviously, dividing by cost divided by 3, that's not going to work this time. We have to, because they're not using the apartment at the same time. So what will be the allocation? How we gonna, which one we're gonna use, what we're gonna use to be more accurate in our allocation of the cost, so we can find out how much each of them has to pay.
by the hours that they spent?
The hours that they spent. So the hours that they spent actually in the apartment can be allocation for the cost that they have to pay. And that seems to be fair. Make sense? Because in that case, we're going to find out how many hours each of them are actually using the apartment. Now, that's what we're going to do this time, and that's what I'm going to teach you today, how to use a different allocation in order to come up with a relatively, or in this case will be exactly correct cost. So we can cost our products more effectively and find out the actual cost. So that's called activity-based costing. And activity-based costing is a tool, obviously, for decision makers, which decision maker will be the managers. Managers, when we say managers, that will be you. So activity-based costing system is designed to provide you with the cost information for the strategic and other decisions, mostly for the profit, that potentially can affect the capacity, or because of that, they can affect the fixed cost, but in some cases, they might affect the variable cost. It's a supplemental system, so it's not the main system, it's a supplemental system So we have to keep that in mind. So if we want to add additional activity-based costing, that will be extra cost for the company because again, it's a supplemental system. Now, if the traditional system is the system that using predetermined manufacturing overhead, and the activity-based costing system is a system that is based on the activity, what's the difference between one and the other? Now, in traditional, when we're using only the manufacturing overhead cost, we allocating only and only manufacturing overhead cost. But in activity-based cost system, we might find that we need to allocate some of the non-manufacturing overhead or some of the period cost that we usually expense. So that will be something interesting. So in traditional, we only allocating to the product manufacturing overhead cost. When activity-based costing, we're trying to find, is there any of the non-manufacturing cost that we can also allocate to our product? The traditional costing system allocating all of the manufacturing overhead cost, regardless if they use from the product or not. We have it there, we have to use it. When the activity-based costing, we're only using the manufacturing cost. We are allocating the manufacturing overhead cost, which was actually used by the product. Also, we are allocating the non-manufacturing cost again, but again, only for those who are actually used by the product. The level of activity that we can have, or level of complexity that we can have in the simple traditional costing system, it will be very, very simple system. Again, we can use the plant-wide overhead rate. How are we going to get a plant-wide overhead rate? By estimating the total cost for the entire factory, if you want to say that, for the entire company. Divided by the allocation base, we can come up with the predetermined manufacturing overhead rate, and that's how we're going to apply. It's very simple. You don't need much effort. Now, if you want to make it a little bit more correct, we can come up with predetermined manufacturing overhead per product, which will calculate the manufacturing overhead for that particular product. And based on the activity that we have, allocation based for that particular product, we can allocate the manufacturing. That will be a little bit more accurate, but again, it will be a little bit more complex to allocate it. The last one, from the level of complexity and the number of the cost pools, activity-based costing will be the most complicated or more complex, and we're going to use a lot of cost pools. The other thing, for each activity-based costing, so how we're going to achieve this, for each activity-based costing, we're going to, in activity-based costing, for each of the activity that we have, we're gonna find out what the activity is. We're gonna add a cost pool for that activity, and then we're gonna measure that by allocation, how much we're using that activity, and then we're gonna come up with the cost per activity. Where in the traditional system, we're only relying on the volume measures, such as direct labor or machine hours. So for that reason, in activity-based costing, we may have different measures. What will be that different measures? We're going to see a little bit later, but let's see now what's the difference again. In traditional costing system, we're using that predetermined overhead rate, which again is based on the budget activity. Budget activity, that means those are estimated. Once we applying the result, once we find out the result, then we're applying that result by using the actual activity and applying as a manufacturing overhead cost. In that case, we're applying everything. including the activity which might not be used by the product. In activity-based costing, compared to the traditional now, the product will be charged only and only for the capacity and use of the activity that they're actually using. Unused capacity will not going to be charged to those products. So that's how we're going to get more accurate cost of our product, because we're not going to dump the cost in our product just because we have it as a cost. We're going to find out, is this actually related to us? And if it's actually related to us for this product, then we're going to actually apply it. So how are we going to do this? Well, we're going to come up with the activity. What will be the activity then? That will be the event that drives the cost. Then we're going to come with the activity cost pool. What will be the activity cost pool? Activity cost pool will be the cost bucket or somewhere that we're going to accumulate the costs which are related to that specific activity. Then we're going to have activity measures. How are we going to get the activity measures? By actually allocating. That will be allocation based for our activity based system, which also is going to be called a cost driver. We have two common cost drivers. One will be the duration and the other will be transaction drivers. So let's see which one is the transaction driver. Transaction driver will be everything which is repeating itself as a function or as a process in the operating cycle of the company. So transaction driver will be how many times we're using this activity, where duration driver is how much time we need for that activity. So again, transaction driver is based on the number of times that we're using it, where the duration driver is simply measured the time that we need to do that activity. So for that reason, the activity-based costing defines 5 levels of activity that largely do not relate to the volume unit. Where the traditional costing, we are only using volume measures, which will be hours, or direct labor hours, or machine labor hours, or anything related to the duration drivers. In activity-based costing, we can go to the lower level of activity will be unit level of activity. Then we can go to the batch level of activity. Do you know what batch means?
It's like it's a big quantity when it's like all of the same.
All of the same. So the batch level of activity, simply I can explain it with this way. Imagine this, you are in the bakery business, right? So you have to make the bread. What's gonna determine how many breads or how much dough I have to make in order to use my capacity efficiently? Well, in that case, or what will determine, let's put it this way, what will determine what will be my batch level? In that case, what we're going to do is we're going to go to a little bit further in the process, and we're going to find out how much is the capacity of my oven. If my oven can bake at the same time maximum of 15 breads, that will be my batch. So when I'm going back to the process of preparing the dough, I'm going to make the amount of dough for 15 breads, which 15 breads when they develop, when they become ready to bake, I can put it all together and use the full capacity of my oven. Because if I make them less than 15 breads, that means I'm not using the capacity of my oven. That means I'm spending for the cost, which I'm not using. Make sense? So that will be the determination of the batch level. The other thing with the batch level, you can easily see it when you go in the grocery store and buy eggs. Eggs, you have it in the batch of dozen, half of dozen, and then we're going to 20 or 30, depends what exactly you buy. Dozen is 12, half of dozen is 6. You have even dozen and a half, you have batches of 18, and then going to the 30 or 20 in Costco, they sell it in 30 and 20, depends. So that will be your batch level. The next thing will be the product level of activity, product for the entire product now. Next one can be organizational sustaining activity, and the next one can be a customer level of activity. So as you can see, we're using a different type of activities in order to determine our cost pools here. Now, in traditional absorption costing system, the predetermined overhead rate is calculated by using the budget activity. Now, in this case, we're going to have this unstable unit product result. When activity-based costing, products will be charged only and only for the cost that they're using. For the cost that they're not using, we're not going to charge them. This result is more stable and costs are consistent with the objective of assigning the cost to the product only for the usage that the product uses. Now, how are we going to define this activity-based costing? Before I go here, let's do one quick exercise with you. Let's see if we can come up with the activity-based costing system ourselves. So you can understand it, and once you see the whole process of finding this activity-based cost system, you're gonna understand it. So, are you guys paying electricity bill? Any of you who paying electricity bill, or you're not paying electricity? Is it part of the rent?
Mine is included.
No,
Yeah.
it's part in the rent.
Part in the rent. So, but let's pretend you paying electricity bill. Let's say you pay electricity bill, and your monthly bill is $100. Right? That's how much you're paying for the electricity. Now, once you get the bill, you can see how many kilowatts you're using during the month. But do you understand how can you reduce your consumptions? Not in that case. Why? Because it doesn't tell you what activity actually drives the cost. I can see that obviously kilowatts driving the cost, but based on what those kilowatts are used, I have no idea. Why? Because it doesn't simply tell me that what activity I'm using and how much is the cost for that activity. So for that reason, in order we to do something about the electricity bill, we have to understand from where that cost coming from. So what we're going to do first level? First level, we're going to find the activity that drives the cost. So we know in our household, we use electricity. When we use the electricity over 2 months, my cost is $100. The question now is, what kind of activity have in my household which consume electricity? What we're going to have? Give me now ideas about activity that we have in our household that drives the electricity bill or consume electricity? Sorry?
Cooking?
Cooking. So you mean the stove. When we use the stove, we have to pay electricity, right? Cooking is one thing. What's the other activity? Washing.
Yeah, washing, we wash
So washer and then dryer. What else? Probably dishwasher, right? If we have a dishwasher. What else? What else we're gonna drive our electricity? What else we can use that drives our electricity?
Aircon units or the heater?
Heater. Okay. Heater will be on the winter time. On the summertime now you need AC, right? Air conditioning. Or we can put it all together. Heater slash air conditioning. What else?
TV.
TV. What else? Are you warming up?
Electrodomestics?
Sorry?
The electrodomestics like the coffee machine, the blender.
Okay. Small appliances. Appliances, okay. What else? Microwave?
Refrigerators.
Refrigerator. Okay. What else?
Computer.
Sorry, what?
Computer.
Computer. What else? Charging, right? Are you charging your phone at home?
Yeah.
Okay, charging. I think we have enough activity. What else we can add here? What else are we missing here?
Cleaning using vacuum.
Vacuum. Slash vacuum. I think we have more than enough activity. Oh no, we're missing the most important one.
Light.
Light. Light. And that will be it, right? Correct? Let's stop it here. At some point we have to stop. Oh, here we have the activity. So now what we have to do is we have to find out what's the usage of our activity. So having in mind that the total usage in this case, it has to be, because the bill is $100 or $100 is also equal to 100%. Not this one, that should be this one, 100%. Now the thing is, all the usage has to be also equal to 100%. So now we have to come up with some measure of our activity and how much we're using that activity during the period. So tell me, which one will be the activity that driving the most of the electricity?
Light, maybe?
Light, maybe. Okay, so how much are we going to assign? Let's say 20% to the light. Or we can reduce it to 15. Let's reduce it to 15 so we can have more to allocate to the other one. What will be the most consuming one?
the refrigerator.
Heater, refrigerator. Okay.
That's
So that
always
will be, let's assign here also 15%.
I think refrigerator is always working.
Sorry?
We shut down lights when we go out of home, but the refrigerator is always working.
Always working. So you say we should put 20% here. Let's put 20%. So let's make it easy here. Let's make this one for the percentage, and I need this total here to be 100%. That's what I'm chasing here, my total to be 100%. So I have 35. So let's assign something for the other one. Heater will be, and this one will be a lot, right?
Right.
Let's put here 15% as well. We can adjust it. TV, not so
Fine.
much, 5%. Okay. Small appliances,
5 as well.
5 as
Right.
well. Washer and dryer,
15.
all together. So 7.5 for one,
7%. 7.
Yeah.
5.1, and 7.5 to the other one. 7.5 to the other one. The other one, okay, we're on 75%, so we're getting there. What else? We have the stove. How much we're gonna assign to the stove?
15.
Now that will be too much. We have only 25% to work with. Let's stay with 5% here. On the which one? Vacuum cleaning. Let's assign. Let's 5% here. We have 15 more. Let's increase a little bit the heater and dryer. Let's increase that one to, let's say, 18% here. So the dishwasher is gonna be, let's say, 5%.
Yeah.
5%. Computer.
2%. Oh, no. Maybe 5%.
Let's increase the small appliances to 7, and let's increase this one, computer, 5%. Up, that way 100. So I have to reduce
3%
something.
and 2%.
Let's hit here, reheat to go for 15, and then we're gonna assign to charging 3%.
Yeah.
Make sense?
Yes.
So now, what we have to do is we have to find, now we know the usage, we have to find the cost, total cost for the usage. Cost for that usage. Make sense? So now, if I know my total cost is $100, and I know that I already know my total cost is $100, end of the story. That's how much I pay. That's my bill. Now I know my usage as a percentage. Can I come up with the cost for every single activity? I should be easily come up with this, right? How much will be that? This cost. And we're gonna fix it time the percentage. And once we add all everything, my total should be equal to $100. Let's see if that's the case. That's the case. $100. So now I know my cost for every single activity. Make sense? Approximate cost for every single activity. So the refrigerator, let's say, driving $20 of the cost. So the next thing that they have to find out is how much I'm actually using that activity for those 2 months. Usage as a percentage. And now we're gonna have usage as a usage of the activity in total. So now the question is, during the month or during the day, let's focus on the day only. How are we gonna measure the stove? How we're using the stove? By the number of times that we're using it or the duration of time? Because every meal can be different. Let's focusing on the transaction driver. How many times you using the stove per day?
2 or 3 times.
Let's stay with 3 times. How many days we have in 2 months period?
60.
60. 60 times 3,
180.
180, right? So that's how many times I'm using it. Number of times. So that will be times of usage. Or number of usage. What will be the number? Here, number of usage. 180 times. Washer. How many times per week you using the washer?
Once a week.
Once a week. So how many weeks we have in 2 months?
8 weeks.
So we're using it 8 times. If I'm using the washer 8 times, the dryer also using 8 times, right? Now dishwasher, that will be per day. Are you using once a day? Once a day. So that will be 180 days. So 180 times. Heater.
Is the dishwasher, isn't it to be 60 if it's once a day?
Once a day, yes, 60. Sorry. That's correct. 60. Heater and AC. Now this will be per hour, right? Now, how many hours you using the heater? Only when you're at home, right? And the same thing will be with the air conditioning. Only when you're at home, you're using it. So the question is, how many hours per day will be that? Let's put it like 5 hours per day. Let's make it simple. Make sense?
Yes, ma'am.
So 5 hours per day time 60 days, what we're gonna give us? 300 hours, right? TV. How many times you watching the TV? Or how many hours per day you watching TV?
Like 2 hours maybe?
2 hours times 60 days, 120 hours, right? So let's see here the measurement. Measurement here we will be on the times. How many times I'm using it? Washer, how many times I'm using it? How many times I'm using it? Dishwasher, we were on times, right? Times again. This here will be hours. And this will be hours. Okay. Small appliances. How many hours you using the small appliances per day?
1 hour.
1 hour times 60, that's 60 hours, right? 60 hours. Refrigerator. That refrigerator running a lot, right? So out of 24 hours, how many hours the refrigerator running?
24 hours.
It's not, because it stops, right? It's not going to be 24. It should be something smaller.
Like 8 maybe? Maybe 8 hours?
Let's focus. Let's put it 10 hours. So it's easy to our calculation. 10 hours per day over 60 days. That will be 600 hours. 600 hours. Computer.
Two
Are we going
hours?
2 hours or more?
Maybe more, like 4.
4 hours. 4 hours times 60, where we are?
200.
240.
240. 240 hours. Okay. Charging.
Two hours.
2 hours per day. 60 days. 120, right?
120.
Hours. Next one will be vacuum cleaning.
$30.
30 minutes. Okay, 30 minutes. What will be that? Half an hour, right? Half an hour, 60. That will be 30 hours. And the last one, lights. That will be the tricky one. So during the summer, the winter time, we need more lights. During the summertime, less time. But let's focus on the winter time. So we need like a 12 hours or 10 hours per day. 60 days. That will be 600 hours. Let's keep it that way. 600 hours. Okay, so now we have the cost, we have the usage, we have the measurement of that usage, right? What we have to come up with now? Cost per unit. Cost per unit. How are we going to come up with the cost per unit? Well, if we have the total cost and we have the number of the times that we're using it, we can easily come up with the cost for the stove. How is it going to be? How are we going to calculate this? Cost divided by the
By
usage,
the
right?
usage.
So every time when you use the stove, it's going to cost you 3 cents. And once I run this one, I'm going to find out for which activity, how much cost me. So every time when you're charging your phone at home, it's going to cost you 3 cents for every hour. If you use the washer, for every time that you're using washer, you have to pay 90 for almost $1. So the question is, now once you know the cost per unit, which is either times, either hours, whatever it is, can you now predict your cost? And if you can you find the activity that drives too much energy, which you don't need, and can you eliminate those activities? Those will be the questions that the manager is going to start asking. That's why you need but this is how basically how you developing and how you're organizing the activity-based costing system in the company. You're starting again with identifying the activities. Then we calculating the cost pools. That will be the cost pool here. From based on each activity, based on the usage as a percentage, we come up with the cost pool. Then we find out the actual usage of that activity. Either we're going to use again a transaction driver or duration driver. And the next thing is to come up with the cost per a single activity. Once that's the whole objective. Once we have the cost per single activity, now I can do something about it. I can increase my cost or can reduce my cost. I can find which activity I want to eliminate, which activity I don't want to eliminate. Make sense?
Professor, when we are gonna do these exercises, are we gonna have like the usage and the cost, or we have to find out
Everything is going to be
everything?
everything is going to be given to you. Everything is going to be given to you.
Oh,
You're going to see
okay.
the assignment, everything is going to be given to you. And that's how you can use this one,
Oh, okay, got it.
right? But the whole point is you to find what's the cost, total cost for the activity, how much is the usage of that activity, and then to come up with the cost for that activity. Once you come up with so basically I'm paying here, the whole point is you to find out why I'm paying $100. I'm paying $100 because every time when I use my stove, it costs me 3 cents. I'm paying $100 because every time when I'm using my washer, it costs me 94 cents. And because I'm using the washer 8 times, that drives $7.50, which adding to my electricity bill. Now, in this case, can I predict my cost for the next month? Of course. What do you have to tell me? How many times you're gonna use any of those. Once you tell me how many times you're using any of those, I can predict your cost. That's what artificial intelligence is doing, by the way. That's how they're so accurate. So let's go now to the slides and let's see the whole process again. First, we're going to find the cost object. Then we're going to find the activities. We're going to have the consumptions of the resources. And then we're going to find the cost. So let's go one after another. The steps of the implementing the activity-based costing is, again, identifying determined activities, activity cost pools, activity measures. We're going to assign the overhead cost to the activity. We're going to calculate the activity rate. We're going to assign the overhead cost object using the activity rates and activity measures. And we're going to prepare the report. So, this company itself, let's take a look at this company. This company is, they have sales, they have cost of goods sold, and they have the gross margin. Now, as you can see in this company, they're losing money. What means that the gross margin is not enough to cover the operating expense, which operating expense are shipping expense, marketing expense, and general administrative expense. So, how they're allocating manufacturing overhead? They're allocating manufacturing overhead by using the plant-wide manufacturing overhead rate. So, based on the level of complexity, they're using the less complex and the easiest one to calculate. So let's see what that brings us. That brings us to the point that if you want to implement the activity-based costing in this company and to find out why they're losing money, what we have to find out is we have to start with identifying the activities, activity cost pools, and activity measures. So in this company, they selecting the following activity cost pools. Every time when the customer make an order, that drives the cost. So the customer order is activity. Product design, every time when they have to do product design, that drives the cost. Order size, based on the size of the order that every customer makes, that drives the cost. Customer relationship, every time when we have to establish the customer relationship, that also drives the cost. And the last one is other. So now let's see how we're going to measure those ones. Customer orders, we're going to measure by the number of the customers' orders, or we're going to use the transaction driver. Product design, number of the product designs, again, another transaction driver. Next one is the order size. That will be order size will be measured by the machine hours. Now we have a duration driver. Next one is the customer relationship. Customer relationship is based on the number of activity for every customers. That's again is the transaction driver. And the last one is for the other, that's not applicable. So that's the explanation of each of those: customer or production design, order size, customer relationship. So on the first stage, we find out the activities. We are allocating the activities. We find what drives each of those activity in the terms of the drivers for allocation. The next thing that we have to find out is to assign the cost. From all the costs that the company has here, as you can see, all the costs that we have, the thing that we cannot do is there's nothing we can do about the direct materials. Why? Because the direct material is direct cost. There's nothing we can do about direct labor. Why? Because direct labor is again direct cost. But we can find something to do about manufacturing overhead. From the shipping expenses, where the shipping is driven by the sales, so there's not much we can do about that. But we can find out, is there anything we can do about the marketing expenses and general administrative cost? So we're going to play with the 1 million plus 300 plus 510. So that will give us 1,810 cost, $10,000 cost. We're going to try to find out, is there anything we can do about these costs? Again, from 1 million coming from the indirect wages, factory equipment, factory utilities, factory building leases. General administrative expenses will be wages, office depreciation, administrative lease, and the marketing department comes with the wages, salary, and selling expense. So we're going to try to find out, is there anything we can do about $1,810,000? Again, direct material, direct labor, and the shipping, those are excluded because they can be directly traced to the product. What we're going to do, the same thing that we did. We have the activity, customer order, product design, order size, customer relationship, and other. Now we're allocating the percentage the way we did it. We're allocating the percentage for every of those activities. Again, the total has to be 100. We're allocating those percentages. So in our case, we have only one driver, one cost driver, electricity. That's why we have only one line here. We have many activities, but only electricity. But here you can see how many different costs they have. Not only electricity, they have so many. So they come up with the percentage, total is 100. The next thing that we have to do is to assign the cost. What will be the 25% of which cost? 25% of the indirect factory wages. So if we get 25% of 500,000, that's going to give us a number, 125. Next thing that we have to do is to assign 20% from which cost? From the next one, factory equipment depreciation. Once we do that, we're going to come up with the 60,000. And we're using the same approach until we come up with this chart. Now, what's interesting in this chart is the total is exactly this total of starting point, $1,810,000. $1,810,000 is the total of this chart. Again, the totals are exactly the totals that we have in this chart, on this report. However, now those totals are allocated by the activity. Now what I can see here is I can find the cost for that activity. So the customer orders cost me $320. Product design cost me $252. Order size cost me $380,000. Customer relationship cost me $367,000. And for the other, I pay $490. Same thing with our exercise when we find out for the dishwasher, we paying total of this much. For the washer, we're paying that much. For the electricity, we're paying that much. Now, the next thing that we have to find out is how many times we're using any of those activities. So the company come up with this. In company, they have 1,000 customer orders, 400 new designs, 20,000 machine hours, and 250 customer relationship activities. So once I have those, I can easily come up with the cost per activity, or that will be my activity rate. So every customer order, every time when the customer make an order, that's going to cost me $320. Every time when I have to do the product design, that's going to cost me $630. Every time when based on the order size, how many hours I have to spend on the order, I have to spend $19 per hour. Every machine hours that I'm using the machine. Customer relationship. In order to establish the customer relationship, it's gonna cost me $1,470 per customer. As you can see, and for the other, that other is not applicable at all. And that's how we're doing this. Now, once we do this, so what we did so far, we already said direct material is direct cost. Direct labor, direct cost. Shipping, direct cost. Now we come up with from the rest of the costs, 1,810,000, we come up with put it with the activities. We come up with the cost per single activity. Now we can start applying the cost. So what we're going to do now? We're going to find out that this company has two divisions. One division dealing with standard sanctions. The second division dealing with the custom compass housing. Now, what are the activities that they have under each division? In the standard sanction, they don't require new design, because why? It is just a standard. We're not doing anything new. But we have 300 units order with 600 separate orders. Every sanction requires 35 minutes of the machine hours, or in total, they need 17,500 hours. So when we have those 17,500 hours, that's only for that we're using for this activity. Now let's see the other one, the compass custom housing. Custom compass housing. They require no new design, so new design are not required. One new design, require new design for every time when somebody ordered this one. Then they have 400 separate orders. 400 customer designs are prepared. For every order, one new design. 1,250 compass housing are produced, which require 2 machine hours per one. In total, 2,500 machine hours for this division. So in total hours, we have 20,000 hours. 7,500 plus 2,500, that's 20,000 hours in total. Once we have those, we can start easily applying. So for the custom, we have 320 for the custom orders. If we have to, we have 600 custom orders. Those are for the standard 600 orders. Every order costs us $320. In total, 192,000. Product design. There's no product design, so we don't have to worry about the product design. But for the order size, we're using 17,500 hours, which costs us $90 per hour. That's the cost. So this is the overhead cost for the standard sanction. For the custom housing, now we start chasing. We have 400 custom orders. We have the cost for the custom order. We have 400 designs. We have the cost per design. And we have 2,500 hours. We have cost per hour. And we can come up with the total cost. Once we come up with the total cost here, the question is, can I go one level down? Can I do this for a customer? For a random customer in my company? Well, of course I can. Now what do I need to know? How many of those he's ordering? for the so this customer, this particular customer, Windyard Yachting, they have 2 orders for 150 standard sanctions per order and 1 order of custom housing. On machine hours, they need 300 standard sanction require or 175 machine hours. For the custom compass housing, they require 2 machine hours. So once I have this, I can easily calculate the cost for that customer as well. Once I prepare this by the divisions in the company, now I can start working with the reports for the both divisions. Again, we're not going to allocate direct material, direct labor hours, but those will be split by the 2 divisions based on how much they're using. After that, we're going to add the cost that we calculated from our calculation here. From our calculation here, we're going to add those costs from activity-based costing. And what we're going to do in the next step is we to find out what's the product margin for the standard sanction and what's the product margin for the custom compass housing. And as you can see here, the standard sanction give us 906,000 product margin, where the custom housing start losing money, $49,500. Once we prepare that report, we extend that report to add the customer relationship and other costs, we still end up losing. We cannot change the fact that we're losing $1,250. As you remember, in the very beginning when we start the whole thing, this company was losing $1,250. That's slide 35. Let's see. In the very beginning when we started the company, losing $1,255 by applying manufacturing overhead only and no the other costs. Once we're using the activity-based costing, we cannot change the fact that the company is losing money. But what we can see now is which division is profitable and which division losing money. So in this case, if we simply eliminate the custom compass housing, we can solve our problem. Because the standard sanction itself generating $906, which is enough to cover the total cost. If we say that from this cost, we're not going to save anything if we're eliminating this division. But this amount that we're generating as profit margin is more than the total costs which are not allocated. So we're going to end up actually on the positive side. So how about the customer? Well, once we calculate adding the direct material, direct labor, and shipping for that customer, then we're going to add the cost that we calculated from the activity-based costing, and we're going to find out that from this customer, we actually generating $699. So it's not ginormous, but at least we're not losing from this customer. So we can keep these customers. Now, that was activity-based costing. Let's do something interesting now. Or shall we take a break now and then continue?
A break. It was too much information.
Okay. That's why the whole idea here was we to come up with once we have this cost that we have to find out how much of this cost is used, then we come up with the activities, right? Once we come up with this cost that we actually have in case, we come up with the activity cost pool and how we measure each activity. And then once we have this cost under each activity measures, we're going to come up with the percentage based on the actual cost for that activity, how much this activity using the indirect material, indirect wages, how much customer order using the factory overhead. You can see this customer order in some of those costs, they're not using anything. So if they're not using anything, we're not allocating costs for them. We're allocating costs only and only to the usage. And then we can come up with the total cost for every single activity. And once we have the number of the activity, we can come up with the cost per activity. Once that's the whole objective here, to come up with cost per activity on something that already happened. Remember, this one is already happened. There's nothing we can do about this. But going forward, we can find out is there anything that we can do? At this point, there's nothing we can do. It is what it is. You like it, don't like it, it is what it is. Going forward, is there anything we can do? And once we come up with this, the most important part of this, the whole exercise, is we to come up with the cost for the how much of that $1,810,000 will be allocated to each of the divisions in order we to come up with this calculation here, which give us, based on those two activities that we have, the standard sanction and the custom compass, how much each of those divisions contributes to the company in terms of product margin. Again, we cannot change the bottom line, but we can see how much each department now, or how much this division contributes to the company. Now, this is from the activity-based costing. We can apply it to the company, we can apply it to the customer, depends what we want to achieve. Now let's see now traditional. If we have to allocate, if we have to use only the traditional is only that we have available, we're not using activity-based costing. Let's see how we're gonna allocate manufacturing overhead, because in traditional system, we're allocating only the manufacturing overhead, which, if you remember, was $1 million in the very first chart when we have it. The manufacturing overhead is only $1 million. So we're trying now to allocate only and only that cost using the traditional costing system in those two divisions. Let's see what will be the profit margin in those two divisions. So again, direct material, direct labor, there's nothing we can do. They're directly allocated. After that, we're trying to allocate the manufacturing overhead. On the manufacturing overhead, we're going to allocate only $1 million, nothing else. But based on the hours, because our driver will be the machine hours. We already know that our machine hours are 20,000, 7,500 from the sanction, and 2,500 from the custom, 20,000, and the cost is 1 million. So that means for every machine hours that the division using, we have to put $50. Once we do that allocation, we are going to allocate to the standard sanction 875,000 out of 1 million, and for the custom only 125. Why? Because the standard using 17,500 and the custom using only 2,500. Now, once we have this allocation, and when we run the product margin now, as you can see, using the traditional system, the product margin from the standard sanction from 903,000 went down to 615. And the custom compass from negative 49 now become positive 258. Company still losing $1,250. But now those two divisions showing different product margin. Again, under activity-based costing, Those are the product margin. Again, we're losing 1,250. If using the traditional, we're having this calculation. Now the question is, which one is more accurate? On which one, if you are the manager, on which one you're gonna rely more? On the traditional, which give you those numbers, or on the activity-based costing, which give you these numbers? What you gonna say? If somebody asks you, which one should I trust? Traditional or activity-based costing? Which one gives you more accurate allocation of the cost? On a more accurate picture of my company? What do you think? Any suggestions? Are you guys there?
Yes.
Yes, I think this one is more accurate, maybe.
Maybe. So the question that I'm asking is, back in the restaurant, which one is more accurate? To get the bill divided by 5, or to split the bill and everybody to pay whatever he consumed for? Which one is more accurate?
Whatever they consume.
Whatever they consume. So basically, activity-based costing is exactly the cost that they're using. Traditional, they're allocating even the cost that they're not using inside. So for that reason, once we compare traditional with activity-based costing, we can see that on the standard sanction, we have change in operating margin of almost $300,000 going down. And in the custom compass, 300,000 plus going up. So the traditional costing, when we're using the traditional costing, that overcost the standard sanction. So put more cost in the standard sanction and the lower product margin. Where in the other one on the custom compass, putting less cost. Why? Because we're using allocation base, which is not entirely accurate. Our allocation base, as you remember, was machine hours only. But that doesn't show the entire picture because it's not based on the activity. So, what are the differences between activity-based costing and traditional? First, traditional costing allocate all the manufacturing overhead to the product. Use it, not use it, take it. Same thing like splitting the bill by 5. You eat, you didn't eat, pay for it. Where activity-based costing only assign the manufacturing overhead, which is actually consumed by the product. Again, when you split the bill, everybody pays for the consumption that they actually consume. Second thing, traditional costing allocates all the manufacturing overhead using only one allocation base, which was the machine hours. Where in activity-based costing, we have so many allocation base and not only volume, but also transaction drivers. So we're using a lot of allocation bases. We're looking from the perspective from different angles. Traditional costing, the last thing is the traditional costing will disregard the selling and administrative expenses because those are treated as a period expenses. In activity-based costing, we're not saying those are period costs we're not allocating. No, we're gonna check those one and see if those costs are used. And if they actually are used, we're gonna allocate them. So, which system we should use to improve our future in our profitability in the company? Obviously, activity-based costing. That's why we're going to talk about activity-based management in conjunction with activity-based costing. Now, there's a theory of constraints approach, which we're going to discuss later in chapter 12, which is powerful for target improvement in the effort, but activity rates can also provide a valuable clue or way to focus our effort, which will be now we're going to start talking about value-adding activities and non-value adding activities. Means which activity is going to improve our performance in the future or increase our profit, and which activities are non-value activity, which means they only consume and eat from our profit. Those are the things that we have to figure out. Now, benchmarking also will be used, and benchmarking is going to help us to compare the activity cost information with the information from the company, which are the leaders in our industry or our organizations, anything that process that is leading in our organization, so we can achieve those performances as well. Everything is about the increasing the performance and perform on the high level. Now, activity-based costing and the external reporting, now that's the tricky part, because the activity-based costing is not supported by international financial reporting standards or any standards itself. So the activity-based costing is not used by most of the companies. Why? Because first, external reports are less detailed than internal reports. It may be very difficult to make changes to the company accounting system in order to accommodate activity-based costing. The other thing is activity-based costing doesn't conform with the general accepted accounting principles, standard accounting standard for the private enterprises and international financial reporting standards. And when auditors see activity-based costing, they're very skeptical in the terms of how the activity was determined, how the calculation for that activity was determined, and anything like that. So limitation of activity-based costing requires substantial resources. What means substantial resources? One of the activity-based costing, there's an example for substantial costing, activity-based costing. There's a grocery market chain in Europe which purchase activity-based costing inventory system from ACCT, from SAP. They spend $500 million, $500 million on that system itself. SAP produced the system, they tested, they didn't like it, they buried the cost. So activity-based costing system, when you're looking at the perspective, the resources that you need is expensive. How expensive depends on the size of the company, depends on the purpose of the company that's using it. Is it powerful? Yes, it is. The next thing is, one of the limitations of activity-based costing is the management of the company, and all level of the company, of the management, has to have a fully desire to allocate the cost to the product. Most of the time that doesn't happen. Why? Because activity-based costing tends to relieve the things that when you see it, you don't like it. For example, imagine this accounting company running activity-based costing. Is it going to be appropriate? Definitely. Why? Because Accounting company, what they're doing is who are the customers? The customers are the random people, like physical people, or can be company. For what they're charging for the hours. What the activity-based costing is going to do is going to give them the exact amount of hours that every person in the office or every accountant in the office actually work on the file. What we're going to do in this case, we're going to eliminate any time wasting, any washroom breaks and anything like that, and we're not going to allocate for those hours. What traditional system is going to do? Traditional system is going to do very simple thing. Person coming to work at 8 o'clock and leaving in office at 4 o'clock. Simple math is 4 o'clock is 16, 8 o'clock is 8, 16 minus 8, 8 hours. 8 hours. Those 8 hours going to be allocated to the client, and client has to pay for it. Is that fair for the client? If you're the client and that's how your accountant charge you for the hours that he spends, is that fair for you? Normal answer will be no. Why? Because you're paying for his lunch, you're paying for his washroom breaks, you're paying for the time that he's spending on the personal emails, you're paying for the time that he's texting, tweeting, Facebooking, everything that he's doing that he's not supposed to do during the working hours, but you're paying for it. Is that fair? That's a different question, right? So activity-based costing, if you implement activity-based costing in the accounting company, that's going to review information, which it might change the entire perspective of the office. And at that point, you may find out that some people of the office naturally has to be let go. Why? Because we're paying for them to do nothing. A long time ago, on the company that I was working, I wanted to implement activity-based cost system. So I talked to the owners about this. Do you know what they told me? They told me, we don't want to do that. And they said this, I know that the people not working. I know people spending time on their personal emails. I know people texting and doing the activity that they're not supposed to do during the working hours. And I know I'm paying for those hours. But I don't want to go deeper. Because if I go deeper, half of the people have to leave the office. And the other thing is, if I start going that direction, I have to be very, very strict on that. So for that reason, I don't want to know about it. Now, this is office who's working with the humans, right? If you're working in the process, which process is different activities, different costs, in order to improve the process, maybe it will be good if you implement activity-based costing system. Yes, some people are not going to be happy about it. So that's why you might feel that some people, they don't want to cooperate on the activity-based costing, allocating the activity cost pools. Why? Because if that happen, they might see things, the management may see what they're actually doing. For that reason, they're going to do everything to, not to sabotage, but not to cooperate after implementing a activity-based cost system. The other thing is, once people start seeing the new information based on the numbers in the reports, since they see something unfamiliar, they may become resistant. Now, to some extent, there might be misinterpretation of the numbers, which is a very common thing from the people, because people usually looking in the direction they're not supposed to look and look at the information for the different reasons. So you don't know what's the prime reason why the person looking for that information, and revealing information to that person, it might be crucial for some other. And the last thing is that, again, activity-based cost system is not comfort with the general accepting accounting principles. For that reason, every company that using activity-based costing system have to run 2 accounting systems. And that's about activity-based costing. So what's the how else you can apply activity-based costing? You can apply activity-based costing in your life if you want to. Again, only if you want to. How can you do that? Very simple. You can find activity that you're doing in your life, which you're doing it anyway, but a waste of time. And you can think of eliminating those activity or reducing those activity in order you to improve the value of yourself and the value of your life. But again, that's only if you want to do that, because sometimes knowing more and doesn't make you happier. Knowing on what you're spending your time, it's not going to make you happier. Knowing the simple fact that on average life, on the average human life, that if you spend 20 minutes in the washroom, that transfer to 3 to 5 years of your life, that's not going to make you happy. And knowing that you're texting and you're spending on your phone more than 20 minutes per day, that means 5 years of your life, 5 years of your life, or more than 5 years of your life, you're spending it on your cell phone. I don't think that's going to make you happy. But that's the reality. Knowing or not knowing, that doesn't change the fact that you're not spending that time. That's why it will be very interesting if we can have, imagine this, like a, let's not give you too much time. Let's say 15 seconds, or like 2 minutes, let's put it 2 minutes. 2 minutes before your departure, each of us departure from life, right? 2 minutes before we departure from life, we getting a list. Somebody print a list and says on the bottom, let's say you live 80 years. From those 80 years, you work that many years, you sleep that many years, you drink water that many years, you're texting that many years, you're checking your email that many years, you waste it, and you see, and then you can see those two, all the times that your life is of 80 years, it's added in 2 categories: valuable time, time wasted. And the question is, how many years will be on the time wasted? And what kind of activity that you're doing or we're doing, which are just waste of time, which is a time that you're actually living. It's your time. That will be interesting report to see. And imagine there are 2 options here. One option is when you see this report, you're gonna say, really? That's how I wasted all my life? Or the other option is, wow, what a life I lived. So that's why I don't want to leave you too much time, because if you actually wasted your life, you're gonna be super sad at that point. So 2 minutes will be enough you just to see the information and just go. not to give you too much to process the information, because the processing, anyway, there is nothing you can do about it. You have to understand that most of the reports that we're doing here and all the conclusions and everything that we're doing is there's nothing we can do about it. It's just a report that's already happened. The question is, based on what we're seeing, is there anything that we can do about the future? So seeing that report, how you spend your life at the end of your life, it doesn't help you a lot, but it's just going to give you an idea what kind of life you lived. But having a mid reports, let's say on year 20, you get the report, this is how much you're wasting your time. On the 20 to year 30, that's where you have. Now you can see where you are, and you can start thinking about improvements, and you can think about the other thing that they call it is value engineering. What will be the value engineering in this point? Analyzing the activity that you're doing, identifying which activity are value-added activity and which activity is non-value-added activity. And the value engineering is simply eliminating the non-value-added activities and focusing on the value-added activities. These are the things that we have to think about it, and we have to improve if we want to have a good, how can I say, valuable life. But again, this is a perspective on the activity-based costing system, but this is only activity-based costing. This is something that it can be achieved only from the people who want to achieve it. It's very interesting perspective. It's not for everybody. Don't get me wrong here. Some people, they don't want to know those things, and they're happy at what they're doing. Some people, they naturally want to improve. They want to get better. Naturally, they're doing those statistics, those analysis. That's why in every sports and every sports game, that's why at the end of the day, at the end of the game, they literally run the statistics and tells you what happened, how happened, where happened, and everything. And based on that, they start looking for what we can do in the next game. In our case, there's nothing like what we can do in next life, because there's nothing there. You have only one life. I have only one life. You have only one life. The question is, can we identify those one earlier and to improve our life, to make it more meaningful and more valuable by using activity-based costing? But again, that will be analyzing and focusing on activities that you're doing, identifying those activities and realizing which one are good, which one are bad, what can we do, what we cannot do. That's your activity-based costing.